What's going on, people? Welcome back to another property update video. So today I'm going to do things a little bit differently, and what I'm actually going to do is run through some articles with yourselves around the property market news, just to kind of give yourselves some clarification that when I do these videos on a monthly basis, they are research and it's not necessarily just my opinion. So I asked you guys a while ago, and I always ask you on my property update videos, do you think the property market is going to crash in 2022? And as we can see here, from almost 300 votes, we had 28% of you saying 100%. We had 52% of you saying no chance, prices are still going to continue to go higher. And then we also had 20% who were just absolutely starving and just couldn't give a shit. Nonetheless, I thought I'd jump into this because obviously you guys know my opinions based on the previous videos. And I've just got a few articles that I just want to run through that I think may just add to your understanding or maybe enhance some of the knowledge that you got, because I'm sure you guys are much smarter than myself and you've already researched this as well. So let's get going. And by the way, guys, if you smash that like button, it costs you literally nothing, but it certainly helps me out for all the hours and hours and hours of content I try and get out to you guys on a weekly basis. So the first one that I got was from the Forbes Advisor, and this was by Andrew Michael. And it was an interesting one because, again, it just gives some statistics in relation to the HMRC property transactions. So in October 2021, the transactions sold in September 2021 up 67% from August. I think I mentioned that on the last property update video, and September's figures were almost 70% higher compared with 2020. And I'm sure many of you, whether you were buying houses or in the market, were probably seeing this rate of transaction being absolutely massive. And one of the reasons for that, obviously I've mentioned previously, is the stamp duty holiday was obviously helping, furlough was allowing people to obviously save, and then the record low mortgages as mentioned here. And also the pandemic, it kind of made us all think twice about our living standards, and obviously there was a race for space, which obviously pushed up the transactional volume. Now, another statistic I wanted to just quickly run upon is that the average UK house price is up 10.6%, and this was measured in August, and the average UK property was now worth £264,244. Again, I mentioned that on the previous video. So obviously if you want to check out some of those statistics in relation to the rents and house prices, please do check that out. Very quickly moving on, so looking at Zoopla, who, if you don't know who Zoopla are, if you're in the property market, you may want to get to know them because obviously it's a great search portal, but they do have blogs and stuff as well. Now, I was reading through this one, and again, this was interesting because they predict and forecast a 3% increase in UK house prices in 2022. And they did state that the low supply, which obviously we were all aware of, will support price inflation. And it points out that obviously houses remain affordable in many markets. Some may beg to differ on that, and that competition amongst mortgage lenders will also keep rates low. What do you guys think? Do you think the mortgage rates are going to stay low, or do you think there'll be an increase with those? Zoopla then goes on to say that obviously there was an artificial rush, and this was what I was saying, you know, we were propped up artificially with all the stimulus and all the money being pumped into the economy, and obviously with stamp duty, etc. But they did say that the activity would taper off, and I think we've seen some level of transactions falling off. There was so many people literally at the races trying to get their properties done before the stamp duty ended. And then finally, what they spoke about was the borrowing cost. Now, this is something that I think we all need to be wary of and at least think about, especially if you're an investor or you purchased a home, whether you've even fixed that for 2 or 5 years. We've got to start thinking in the future and think about, what if the rates were to rise? How would that affect my buy-to-let portfolio, for example, or even my residential mortgage? So the Bank of England base rate remains at a record low, as many of you know, at 0.1%. But there are experts saying that this could rise in the future. So guys, please do think about that. Next up, we have this extremely happy man on here, but more importantly, we have an interesting article from Vicky Spratt, where interest rates, as we know, are historically low since the global financial crisis, which was literally when I graduated with my construction project management degree many years ago. So literally finding a job was very difficult in the construction industry. And it goes on to talk about that obviously low interest rates, essentially obtaining cheaper credit, was part of the reason that house prices had risen so much in the years. And I always say that when money's being pumped into an economy, what you're essentially doing is you're depricing assets. So you keep pumping in more money, the value of that goes down, and obviously the value of assets as a consequence increases. And this was an interesting comment here, which is where it states, unfortunately, there's no such thing as a free lunch. And I kind of agree with that. There may be lower house price at the minute, and this might ease the amount that first time buyers need for a deposit. higher interest rates would mean that they'll be paying more to borrow, especially if lenders get nervous. So even if you manage to buy something on a 5% or a 10% scheme right now, you have to be conscious that what if this increases? Can you afford that? Because it's really going to rip into your monthly cash flow or your surplus amount of money. And then just quickly moving on. Now, this one is good for anyone who's invested in London or has properties in London. Prime central London property market returns to form. So following 18 months of, well, almost muted activity, and I think London was kind of one of the slowest ones in terms of its overall growth, obviously because it's in its own kind of world when it comes to the property market. Central London's prime property market is now showing signs of a rebound, with buyer demand at the start of the summer reportedly up 60% since 2019. However, there is a higher ratio of overseas to domestic buyers than the majority of the UK. So that's obviously something to note as well. It is a bit of a hotspot for overseas investors. Now, something slightly different. So I thought this was a contrasting one because I don't just want all of them agreeing with literally with each other. And this was by the BBC, where they said that the surge in house prices is predicted to slow down. And the first sentence they say is that the UK's pandemic house price boom is coming to an end, but property prices are still expected to rise in each of the next 5 years. And it does show this useful graph here that you may just want to have a quick look at, which shows the house price surge is predicted to slow down, and it just has a timeline at the bottom and obviously the percentages on the side. And the OBR has now predicted the house prices will go up by 8.6% this year compared with earlier, and the annual rise would then slow 3.2% in 2022 before decelerating further into 0.9% in 2023. Moving on. Housing market crash. So firstly, Halifax reported that the average cost of a home is £262,954. However, the National Association of Property Borrowers commissioned a survey which found that property prices could rise to £297,700 next year. But one thing that was interesting was when asked the question that could there be a crash in the next decade, their response was, I would say yes, it is likely. So this is obviously something that is kind of more on my opinion. Again, I could be completely wrong, guys. I just want you to urge on the side of caution. I'd rather be completely wrong and you guys are fine. But the last thing I'd want to see from any of you is not to even envisage a crash or interest rates rising, for example, and you get yourself in a spot of bother. And the last point I wanted to mention was that the Bank of England is set to vote on a rise in interest rates from the current rate of 0.1 to 0.25. And some estimates from the Office of the Budget of Responsibility also claim that interest rates may rise to 3.5% in 2023. Something to think about, guys. If you can fix that mortgage for 10 years, maybe try that. Moving on. So U-turn on the housing market forecast by the government. So official forecasts suggest that house prices, again, pretty much going with the previous articles, that they will rise somewhat for the next 5 years, although the boom won't be as big as we've just seen in the last 18 to 24 months. And one thing I thought was useful was this chart here, which shows the UK mortgage lending remains above pre-pandemic levels. So I did get some statistics here. So according to the government English Housing Survey, the pandemic allowed obviously homeowners to save, but those left in rented accommodation actually had less at their disposal. We know that in many areas rents were obviously rising as well, meaning that saving that deposit was obviously slightly more difficult. And then to kind of follow on from this, what I wanted to look at was the cost of mortgage borrowing. So mortgage borrowing surged to 9.5 billion in September. So I'm sure many of you watching this now have a mortgage over your heads, which is pretty much more than double its level in August. So that was an interesting statistic. And also the HMR reported that there were 161,000 residential transactions in September, which is 62% higher than the 12-month average pre-pandemic. So these are crazy numbers. Like, you could see that everyone was literally rushing to get themselves a home. And also NatWest on Friday, so this was quite a new article, so last Friday, probably the Friday before, reported a growth of 2.5 billion in its mortgage lending in the last 3 months to September. And random stat, NatWest was actually the first mortgage company that I ever used when I bought my buy-to-let many years ago, just over 10 years ago actually. And with that, my friends, that is pretty much that. I thought I'd try and do things a little bit different here, just to give you guys an update on the property industry. And obviously, if you found any of this useful, please do smash that thumbs up. Please let me know if you still think there's going to be a crash. Let me know your thoughts, or if there's anything else you want me to obviously include on this channel. And again, guys, I just want to take this moment to thank you guys. When you could have been doing anything and you chose to spend a few moments with me, and that makes you pretty awesome. So until next time, guys, thanks for watching.